given, but now we're going to learn how to calculate income tax ourselves.
Yeah.
So this is a tax table. This basically, notice that this says taxable income, and then this says take on this income, tax on this income. So like I was saying earlier, when we are doing tax deductions, we have our income, our regular plain old income, our gross income as it's called because we haven't done anything to it. And then we subtract our deductions, and the new amount is our taxable income, right? So then on this, we only pay tax on this taxable income. So we don't include any of the money we spent on deductions when we're calculating our tax.
Yeah.
So what does this mean? So how would we, so John's gross income is 78,670. His total deductions are 4,630. Find his taxable income. How would you do it?
So there'd be no tax on that.
Well, there would be tax on it.
Sorry, no, that's his income. Oh,
Yeah.
okay.
That's his
So,
income,
yeah.
and that's his deductions.
So like the last one on the table, so 18,600.
Well, we're not finding his tax yet. We're just finding his taxable income. So this is the income that we'll use here. We haven't found that yet. We've just got his gross income.
Yeah.
So how do we find his taxable income? Not the tax he pays, which is where we use this table. We only need these two numbers, and we want to find his taxable income.
What? I don't get it.
So John earns a gross amount. He gets a paycheck, and at the end of the year, he has $7,670, right?
Yeah.
He then has deductions on that. So these are tax deductions. So he has $4,630 in tax deductions. So his taxable income is going to be his regular income minus those deductions. And then that is the new amount of money that's the money he has to pay income tax for. He doesn't have to pay tax on the 4,630 in deductions.
So would you just minus the income by the deductions?
Yeah. So we go 78,670 minus 4,630. And this is going to give us a new value, and this is the income he's going to have to pay tax on. So this is going to give us $74,040, right?
Yeah.
So now he has to pay tax on this. He's not paying tax on the 78,000.
Yeah.
Yeah. Does that make sense now? All right. So then how would we calculate the amount of tax due?
Tax on Would it be the one on the table, like the last one?
Yeah, so now we're going to use the table. So now because he's over $70,000, we're going to use this last one, right?
Yeah.
So he has to pay $18,612. So he just has to pay that much, first of all. But then he's also going to have to pay plus 47 cents for each dollar over $70,000.
Oh.
So how would we find that amount? Any ideas?
So he's over 4,040.
Yep. And we're paying 47 cents for each dollar.
We times 4,040. Wait.
Yep, 4,040.
Wait.
You're on the right track. What are we timesing this by?
Oh, yeah. We times it by 0.47.
Exactly, times by 0.47. And then what do we do with the 18,000 and this new value? What goes in between them?
Plus?
Plus, because he has to pay 18,000 initially, and then on top of that he has to pay this amount, so we plus the two, and that gives us a total amount he has to pay in tax. So from here, let's find what that equals to. 4,040 times 0.
20,500. Wait.
Yep.
Yeah, $20,510.80.
Yeah. So he gets paid $78,670. He has a taxable income of $74,040, so that's the money he's paying tax on. And then he actually pays $20,500 in tax, right? That's quite a bit in tax, actually. That's almost a third of his income.
Yeah.
Anyway, if he pays $485 per week in tax, how much refund should he receive for the year? So what they mean by refund is when you're paying tax every week on your income, if your final tax that you pay, so let's say you pay more tax than you needed to pay. So let's say he paid more money than this $20,000, right? Then at the end of the year, the extra money he paid in tax, he gets back because he didn't have to pay that money in tax. So the government doesn't take that money, they give it back to him at the end of the year when they know how much more he's paid.
Yeah.
Yeah, and that's called a tax refund. So he just gets a big lump sum of money that he paid extra and they give it to him. So if every week he's paying this amount, we want to find his tax refund at the end of the year. So how do you think you do it?
We times 485 times 52.
Yeah.
Okay.
And what does that equal to?
25,220.
Yep. 25,000.
We minus that by $20,510.80.
Perfect.
Which gives us $4,709.20.
All right. $4,790.
And 20 cents.
20 cents. Does that make sense?
Yeah.
Perfect. So that is, oh, sorry, that should be a 9, shouldn't it? Not a 90. So that is income tax. And that's how we calculate it. First, you have to find, so what are the steps we used? First, taxable income. So when we're finding income tax, step 1, find taxable income. So this is the income he'll be paying the tax for. And how did we find this?
Right. Oh.
Bless you.
7,000. Oh. Yeah, we minus his salary and his total deductions.
Yeah, so gross income minus deductions, right?
Yeah.
And then step 2, what did we do? We found the tax to be paid. I'm doing steps. I should do find tax to be paid. And how did we do that? Well, we used the table. Used tax rate table. So the tax is going to change depending on what band they're in. And if they're less than $6,000, then they're not paying any tax, are they?
Yeah.
All right, so from here, third step and final step for this question is find any refunds. And how did we find the refunds?
We found how much he gets paid in a week times by 52.
Yep.
Or how much tax he pays in a week.
Yep.
And then we minus that by the amount of tax due.
Perfect. So we did tax paid minus tax due.